So we've got a red cloud here. So it is very, very important for us to pay attention to all these metrics. When all metrics flips from the bullish side down to the bearish side, you need to play along with what you're seeing. Now, how would you know? You can see this green EM is called the Chico span. Now, the Chico span is inside the cloud and trying to make its way to the downside. The blue EM here is called the Tenkan-sen, while the red EM here is called the Kijun-sen. So now we have gotten that bearish cross to the downside. Now, if the Chico span goes down to this, and these two metrics goes down to this level, we would get more downside. The future cloud here is bearish, which is red. So we need to be very careful. We need to wait and see what will happen. If this doesn't go down too much, we might get bounced back to the upside. That is why it is very, very important we know what we are doing. So let me put back the price. And on my signal group, we talked about so many chart patterns which has actually played out. And the first one was this ascending rising wedge, rather. We've got this rising wedge here. We've got this rising wedge here that played out well. But one thing that actually made this to delay a bit was this. We got the breakdown and went back up to retest. So that is why in trading you need to understand how far it is from the support to where the price broke out from before. Maybe you missed the breakdown or the breakout. You can place your limit order close to this level so that it will pick you. So all this requires patience to play out. Now, the main question is, what am I expecting? So what I do is this. I pay more attention to the daily time frame at this point. Pay close attention to the daily time frame. Now, just like what we had here, I think on the 2 hours time frame, we had this coming. Let me admit this. So just like what we had here, which is the head and shoulder chart pattern here, which has this up sloping support, and this support is called the neckline. We had the left shoulder here, the head here, another head, and we got the right shoulder. Now this chart pattern is called the complex head and shoulder. Why is it called the complex head and shoulder? Because it has two different heads. So a complex head and shoulder chart pattern is a chart pattern that it would either have two different left shoulder and two different right shoulder and one head, or two different head and one single left and right shoulder. So we had this and we measured that take profit level to the downside. We got that profit to the downside and it closed. So now why I'm showing you guys this is because of what is building up on the 4 hours time frame. Yeah, okay, daily time frame rather. The daily time frame. So when I spread this, we'll have this upsloping support here again. You can see how price is trying to stay above this upsloping support. We got this rejection week here, rejection week, and yet another rejection week. So now this is how it's going to play out, which I think it will play out. We'll have this left shoulder here. We'll have the first head here. We'll have the second head here. And we have yet another right shoulder here. Now, take note of this. Just because I'm saying that this is a complex head and shoulder top doesn't mean if price doesn't close below this upsloping support, it doesn't mean it will continue to go down. Now, try to understand this. This is how it works. What I do is this. If the body of the candlestick doesn't close below one, okay, 1, 2, 3. If the body of the candlestick, I'm not talking about this rejection. If the body of the candlestick doesn't close below this psychological upsloping support, there is no way price will come down. But if it closes below this, then it has breached a lot of level of support where the buyers buy and hold the coin for it to push back up. Now it will breach that psychological level and continue to go down. How do we measure this? We take this from here down to this level, and you drag and drop it here. So now I have a target of around here. Now, just because you've seen this target doesn't mean price would move down 100% to that level. That's why I split my take profit level. I start from the levels of support. I have this, very important. Or if you don't want to use that, you can as well use this here. I have this, I have this, I have this down to the last target here. It's very important you split your take profit level to the downside. You cannot say you want to wait until it gets to this level. So that is why FTX is a very good platform for you to do this. You can split your take profit level, and if you want to take half, if you want to close half of your position at the first take profit, you can do that and continue to adjust your stop loss down to lock in profit. Now, again, the other side of it, which I want to explain, take note of this. The chart pattern you're seeing here is called a bearish reversal chart pattern. I explained this in one of my YouTube video. This chart pattern you're seeing is a bearish reversal chart pattern. Why is it called a bearish reversal chart pattern? Because this pattern was found at the top of the trend. So it's just like where you have, let me draw something like this, where you have price moving up, and when it got to that place, it got to this level, formed this, went high, then formed this again. So within the pace of this level round here, it is consolidating. That's what we call when a price is consolidating, it is trying to form a chart pattern to continue its move or to reverse. Now, when it formed this to get to this level and push to the downside, so it has reversed back to the downside. Now, why I'm explaining this is because it is not all complex head and shoulder chart pattern or just normal head and shoulder chart pattern that goes down. You need to understand this very well. Only if you get the break to the downside, that is when it is confirmed. Now, what am I trying to say here? What I'm trying to say here is if the daily candlestick doesn't close below this psychological level, if the daily candlestick doesn't close below this upsloping support, this will likely happen, and this is how it is calculated. We'll get a push back to the upside above this. Above this would be the perfect place to open a trade, because most times you can see, maybe most times this will go up and come down back. I've seen this several times. So what to do here is this. This is how we calculate this. We take let me bring this down. Okay, I'm gonna move this drawing. Coming. Okay, so let me take this down a bit. So I'll take this from here, which is the top, and you drop it at the top of the right shoulder. If price doesn't go above the right shoulder, then there is high probability this will continue to push down. So we need to be very careful. Wait for the break to the downside or wait for the break to the upside. It will give you that let me say 60 to 70% chances that the price will continue to push higher. And don't forget, this reversal to the upside is called the bullish continuation chart pattern. So don't confuse yourself with that. So if we have something like this, up from this head and shoulder, normally it's supposed to be a bearish chart pattern. This is the neckline. And if it continues to go up, it is called the continuation to the upside. So you need to know how to differentiate bearish reversal, bearish continuation, bullish reversal, and bullish continuation. These are the four things that are very important if you're charting. So, and lastly, I don't want to take much time. Lastly, I would want to point out this. Okay, I have two things I want to point out before we'll call it a day, and we'll wait till tomorrow for this candlestick to close. Okay, okay. So what I want to point out here is the use, you can see this side of trading view, is the use of the pitchfork. The pitchfork is a tool that is very important. I've been using this for some time and so far so good. It has been perfect in terms of the levels. So now how do you use this? Let me remove the drawings and show you guys how this can be used and why I want to point it out for you guys to use. Okay, let me use BTC USD. I want to use Bitstamp. Why? Because it has more data to the back side. Okay, this is why I'm using it. Okay, so let me remove this. I've used this already. So now let me remove this and use this. Now, how you use pitchfork is this: you drop you look for the low where when you drag it up, you look for the first high to the left side, then you drag it down back to a low closer to the first low you picked it out from, which is from here. Let me expand this. Then after drawing this, I'll show you guys what is really happening. So you can see this. Now, the pitchfork has, I think, 6 different rules. I would not be able to remember everything, but what I know, the 2 different rules I can remember. One, which is very important, is there is high probability price will test the median line. The median line is the red. That is why you see this and you see price bounce here, 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 hold on, breakout, pull back, test, and continue. So there is high probability price will test the median line. This might not be so perfect only when this breaks to the downside. So I actually used this, I think, okay, in the previous bull market, I think so. Yeah, I think so. Yeah, around here, if I'm correct. Yeah, you can see it. Okay, so this can be adjusted to this level and this level here, and you bring this down back here. So you can see median line, come back, test the median line, and I've actually adjusted this. Normally it's supposed to stop at the blue and the blue line. So whenever the price goes out or below this, we'll get a push to the downside. And if it's a bearish market, it will continue to go down until you drop yet another pitchfork. So what I'm trying to explain here is this. We need to be very careful. I'm not saying this would go down. Like I said, just pay attention to the daily candlestick close. The body of the candlestick must close below the down sloping support. It's very important you pay attention to that. Whenever I get levels, resistance and support, and resistance and support, they are not always horizontal. You can have up sloping or down sloping. Whatever the support or the resistance is, you need to pay attention to the messages passing across to you, which is either it is going down or is going to break that level. And when it breaks that level, you can now take your trade or you wait for a retest. So the same thing I'm talking about here. So you can see it's very close to this. So if this breaks down and close below this, there is high probability we're going to test around let's say 40 to 37, and I think it's not that much compared to this major drop we had here to this level. So it's more or less like giving traders an opportunity to buy those coins they want to buy. So okay, and lastly, before we call it a day, still on Bitstamp, I have been watching this RSI, yeah, for some time now, and it's very, very important we pay close attention to this. It's very important. I don't know if you guys have observed this very well. So I've been paying attention to this. Look at this. Back in 2016, when the whole bullish market started, it went from this level, even though when we had this drop, this heavy drop, back to this all-time high, previous all-time high. Now look at what happened in the RSI. You can see how price maintained that horizontal support here. You can see 1, 2, 3, 4. Now look at what happened in the future again. Did you see it held that level? So that's why I'm looking at it that okay, this might actually be a spot where price will likely get to. Take note of this. This is a weekly time frame. So I'm looking at it. Price will likely get to this level and would maybe reverse back if this level can be maintained based on the price drop. You won't be surprised. The price of BTC will continue to push higher. And please, if you're a trader, try to do this. I don't forget all this. Try to make sure you put all this on your trading view. You can leave it there for future purpose. This is why I said for future purpose. You can leave this here, this horizontal support, a horizontal resistance, leave it until after 2-3 years. You would see when we are back into the bear market, price at some point will come back to test this level in the future. So guys, these are what I'm looking at, and I don't know if you guys have any question before we call it a day. If you have any question, please do well to ask me via the chat. Let's see, I have this drawn already. So you can see why I said support and resistance are very important. Do you think we are still in a bull market? I don't have any question. Do you? Thanks for the wonderful section. I don't have any question. Okay, someone said, do you think we are still in the bull market? See, you need to understand something, because a lot of people are telling you the bull market, the bull market. One thing is certain: you don't expect price to continue to move high without any retracement. That is how market, that is normal market cycle. So it gives you an opportunity to buy. As far as I'm concerned, as far as the metrics I'm seeing on my chart is concerned, we're selling the bull market, just that it needs to come down and consolidate, form something nice, and continue to move higher. What is the best time frame to use for charting? It depends what you are doing. If you're a day trader, it depends on if you're a day trader or you just want to buy for maybe weekly, monthly. If you're a day trader, you can use at least, let me say, from 1 hour, 2 hours higher. If you're a day trader, that's the best time frame to use. Or when you get if you're a day trader, when you get, let me go back to BTC prep. So BTC prep, when you get, if you use the 1 hour time frame, you can see how this red candlestick is. So if you go down to 15 minutes, you will see a lot of chart pattern that has formed, which actually you should have even made a lot of profit with that, because in the lower time frame you get more chart patterns that has formed, this here and this here. So with this, you would have taken this straight and down. The same thing here, the same thing here and here, here and here. So just like the 1, 2, 3, 4 bullish, bearish move down, can a holder still keep holding? Yes, you can still keep holding depending on what price you bought. If you did not buy it too high, you can try as much as possible to add more as it goes down, but that's not a financial advice. Just depending on the fund you're using to trade. Only invest what you can afford to lose. Oh, so okay. So any other question again? How do you determine support and resistance level? Okay, I've talked about this. Like I said, you can use your Ichimoku to get that. Just I will drop a video, a YouTube video on my Signal group, a video talking about the support and resistance. Or if I don't get it, you can join the FTX African group. There are a lot of videos, YouTube videos, that would explain how you can understand how to set your support and resistance level. So any other question before we call it a day? How do you set trades to avoid liquidation? It depends on the leverage you are using. It depends on the leverage you are using. The higher the leverage, I think the more closer you get liquidated. Yeah, I think so. I don't use above 5x. I've never used it. Sincerely speaking, I've not. So I don't know for others. I don't know how they do it, but I don't use above that. So any other question? They'll be expecting more updates. I'll drop more chat updates so that you guys would see what is really happening. So the absence of no question, I would call it a day, and take good care of yourself, guys. Stay safe and enjoy the rest of your night.